Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Oh, hey.
Hey, buddy, how are you?
Good. How are you? How was the weekend?
The weekend was pretty good.
Cool.
Just kind of get some sleep and stuff, and back to work.
Nice.
I sent you an article. I wanted you could post it for people. I think it's a good article. You know, I've been thinking about what we've discussed over the last couple of weeks and talking about spies versus bonds and rebalancing. And I started looking into it. I wanted to, I'm always looking for the why. I'm always looking for the how. And I think, my overarching thesis is that the United States is in a bit of trouble. The U.S. dollar is in a bit of trouble. I don't think the next crash is going to be housing. I don't think it's going to be the banks. I think it's going to be the currency. I think the next bubble is the U.S. dollar maybe collapses or just gets hit pretty hard. There's a debt crisis, something in that vein. So I do a lot of thinking as to, how long will that take? I've been thinking about this for probably 5-6 years now, saying, this is a chess match, right? So I was a chess player when I was younger. If you watch the Netflix series, it's an awesome series to watch. So it's as a chess player, I know that chess games, in a microcosm could take 3 hours.
Right.
Okay. And the amazing part about the game is that at the highest level, if there's 50 moves each person gets 50 moves on average to play the whole game, or 40 to 50 moves. At the highest level, sometimes they know they've lost at, move 22. And they know it's like 90% chance of losing by move 22 or to 25. And then you're just playing out the rest. And at some point at move 30, 40, you just say, okay, I'm done. I lost. And you shake hands and move on. Right. And this, I tend to look at the world and what's happening out there as this big chessboard where everyone is moving their pieces strategically. And I think the U.S. is in a tight spot. We talked about this last week. But what I have been thinking about is, when is that moment? What happens? Or when are we in action? And then I saw this article, and Michael Burry is basically calling us, saying that, we're going to be the Weimar Republic, which essentially means runaway inflation, where the dollar assets go up until they don't, and then everything crashes. It's a good history lesson. It's something good, but I don't take it lightly when a guy like Michael Burry, who's a smart guy, he's obviously caught the housing crash before anybody else, when he's out there saying, hey, look, like, this is a real problem and this could happen, it's something to think about. So after reading that, I thought, whenever I read an article or I hear someone speak, I try to let's put some pieces together. Let's try to figure out what's actually going on, or maybe let's put something together, a story or something that makes sense. And I started with bonds, the TLT. We've seen the TLT getting killed. Part of the whole thesis is that we're looking at here is to be careful, because bonds are down, stocks are up. The pension fund money has to rebalance, so they're going to be buying bonds, selling stock. That doesn't mean bonds have to go up. Bonds could actually stay flat, but stocks will readjust. It's that spread, okay? So that spread between bonds and equities should come in a little bit over the next, call it 6 weeks. We'll see, but it might have a big burst, one last burst up, but over the next 3-4 weeks, should go down. So essentially, if bonds are not going to go back up, then equities have to come down. Okay, that's the thought. And I started thinking, okay, well, who's selling bonds? So you could Google yourself, and you see that over the last 6 to 7 months, China has been consistently selling U.S. bonds. Okay. So I saw that and I said, okay, China is the seller, right? And that was part of my thesis many moons ago. At any point, China can weaponize the bonds. They're one of our largest debtors, them in Japan. China could just say, we're going to sell $1.5 trillion, or right now I think they have $1 trillion dollars worth of bonds. We're going to sell $1 trillion worth of bonds, and we're going to really hurt the United States. And then the counter argument is, well, what are you going to do with the dollars? What are you going to do with the money? And by hurting the United States, you sort of hurt China, right? That's always been the argument, that we're in bed together, so one can't hurt the other. Really, we're both up there at the top, and that's a fair argument, and there's legitimacy to that argument. However, China now has 7-8 years, and they go out there and they build different areas and do different agreements with different people. And I was always looking at what's called these swap agreements.
Mhm.
So these swap agreements are real important, because if they do a swap agreement with Iran, North Korea, Russian, they could bypass, right? They'd have to actually build these tunnels, if you will, of money, where you can wire money without going into US dollars, okay? Which is really interesting. Bitcoin is a product that takes money out of US dollars. I just started piecing this all together and just started thinking, are we already in this, I mean, most people say that in some ways we are, but are we in this World War III, which is no longer, sending 1 million people to, another country and fighting on the ground? Maybe World War III is what we're in, is economic warfare, where it's a chess match. And right now we are in a battle, because what I then did was I said, well, who's buying the commodities, right? Because right now we have inflation. So it's like inflation, it's confusing, because inflation usually happens when everybody's making money, everybody's, has a job, and we're all spending and spending and spending, and inflation happens, and that's, the prices go up, and the Fed pushes rates down. But it doesn't seem like that. You see people on food lines, and it's really, where is this inflation coming from? Who's buying the commodities? And then it turns out that China is hoarding almost all the commodities. They're basically selling bonds, taking those dollars, and then they're buying everything in sight that they can. So I'm thinking, that's interesting, right? So now you have a country who is now selling bonds, taking dollars, buying everything in sight that the world needs. Prices, they're all priced in US dollars. So US dollar costs are going up for the US. It's hurting our country, because the 90% of people that don't have any money are, can't eat, and prices of food is going up, and that's hurting us. The government has to sort of save that group. Oh, and by the way, coincidentally, a virus came out of China,
Right.
okay, and that has really, really put us on our heels here. And all this starts making this picture of, wow, like maybe it's already in motion. They set up the swap agreements, and you can look, this historically go the last 6-7 years. They have set up swap agreements with the major countries like Russia, almost, I don't want to say enemies, but the people out there that we would say we don't want them to gain so much power. But North Korea, Iran, Russia, Europe, even, Saudi Arabia, the oil countries, they have set these tunnels where they can go bypass the US dollar. You hear a lot of talk about the world currency trading, world currency changing, maybe from the United States to something different. Of course, China would play a big part in that. And you have this situation where maybe they're pushing Bitcoin to get more dollars out of the system. Who knows? I don't, it's chess, but I can come up with a picture thinking, maybe this is China in the doing. Maybe China is sort of, as a front. Yeah, no problem. Oh, tariffs, or we have this agreement. We have to spend X billions of dollars. Sure, no problem. We'll buy all those goods from you. Well, it's a year later. They're not even close to meeting that agreement. So now they back Biden against the wall and saying, okay, well, Biden's got to either go after them hard or not. So these are things to think about. I think the Michael Burry article is interesting. I would suggest that you read it, go through it. It talks about inflation, and there's a possibility that it's not inflation, it's stagflation. Stagflation is where inflation goes up, but the economy, it's not because of the economy. The unemployment is not up, right? So the government, remember, we're backed against the wall. The government wants everyone to get a job, everyone to make money, and eventually they'll tax everybody's money.
Right.
So you do make money, but the government's going to make that money back. Bill Clinton did it. He was very successful at it. He did it in the early 90s, and we had our debt deficit was, I think we had a surplus. to be honest.
Wow.
So that we went from that era to where we are now, which is absolutely insane. And I think there's something there. I think this whole China thing, there's China's selling bonds, China's buying commodities, prices are going up. Our country is on the brink, and the only way out for us is to print. But if we print, then the dollar starts going down, showing weakness, and it's a disaster on the world front, at the world table. And China's saying, "Hey, we got the solution. Let's do this world currency," and everybody has a little piece of that, and we start there. That's not a that is not that is a dangerous spot for us.
Mhm.
For us to lose world currency status, I suspect it doesn't come without a fight. I mean, a real war, a real fight. Whether they blow up something, never in history has someone just given up, all their power without at least going down with a fight. So this, to me, is a little bit of it's a very dangerous situation to me. I see some of the smarter people saying things like this, and I'm, Michael Burry, again, a guy I respect. This is something to look at. So SPY versus TLT. Again, it's a trade that I think in the next 6 weeks is going to gain a lot of the story is going to gain some steam. I would say look today. We'll look at some of the sectors that are being played, but it is a clear trend today, and there's a clear idea of what the world is, or what the big investors are thinking, and where they're pushing their money. And we'll get to that in a moment. But I think when I looked at one of the UOAs today, MOS popped up. Okay, MOS popped up, and all I did was just to read up if there was any news. I read Mosaic up to buy at Citigroup as phosphate momentum to continue. So after I did this whole thinking over the weekend about commodities and bonds and China, and man, is there something really going on underneath the hood here? And I see this. I read, every commodity is up because China's buying it, right? And then it says Mosaic is upgraded to buy. This is on the 25th. Citibank foresees a further appreciation in phosphate prices after global phosphate markets shot up last week, driven by low phosphate exports from China. So not only are they buying everything in sight, but everything that they have that comes out of China, they're no longer exporting. So, I just read that this morning, and I'm thinking, this can't really be what's happening. But wow, it just feels like it sure feels like that. It sure feels like, if China decides to start hurrying up by selling more and more bonds, weaponizing it, and the dollar gets hurt, remember what goes up? Assets, hard assets. And that's what China is trying to buy right now.
Right.
They're trying to hoard everything in sight. They want, you have assets, you have anything, whether, look, copper's up, this to phosphates to make food products, oil, everything. They'll take it all. Whatever you got, we'll take hard assets, US dollar hard assets, because why? Because it ain't going to be worth anything. That paper is not going to be worth anything. And whenever we say it's not going to be worth anything, and we want to make sure that we have all the oil and everything in hand. Okay. So I think it's something interesting, something to look about. It's just a perspective that I'm giving, but I would say Weimar Republic, you should go look at it and understand what happened there. Okay. Everything goes up until it doesn't go up, and it goes straight down. All right. So anyway, that's that. Leads us to let's go into the MOS, right? Because the MOS is something that.
And as we're doing that, I just want to ask everybody to, leave a like.
Yep.
It helps a lot with the algorithm, and really appreciate it. While you're here, just click it and continue watching. All right. So got it up.
Okay. MOS. So I saw this one here, the 35 calls. Now on Friday, they bought 25 to 30,000 of these at 70 cents. Initially I thought, looks like they're getting out of something. It actually looks like they're buying more. Okay. It looks like they're actually buying more today. So on Friday, they bought about 25, 30,000 at about 70 cents. Today, it looks like a buy here. 125 happened early in the morning, but let's just go by time just to see. So we see here price 107 at 10 o'clock, 106, 107. Then at 3 minutes later, 123, 125. It looks like on the offer, and volatility going up. So it looks like they actually bought more today. So they bought these on Friday. They bought more today. MOS has to do with food. You're hearing about food inflation, prices going up. So MOS, okay,
Mm-hmm.
something that I think it's interesting. I mean, I saw the buy on Friday, and now I see it again today. But let's say we're looking at 45, 43. If earnings looks like today after the close,
Yes.
and they're buying the Aprils. It looks like they're buying the Aprils. I mean, it looks pretty good, and I got to tell you, the chart looks pretty good too. So MOS on this upgrade on the 25th back here dropped off. 29 seems to be a level. It looks pretty good. I'm just seeing from the flow today. They're buying April, so they're basically saying maybe earnings might not. Who knows what? I don't
Mm-hmm.
think they if they liked it for earnings, they'd just buy the earnings calls, right? So I think what they're saying is there's something going on here. There's decent volume. You see this drop right here this day?
Mm-hmm.
Okay, decent volume that day, and then we saw this with General Motors, right? When something has that sharp of a move and then quickly rebounds, it's usually pretty positive, right? It's saying we want it, we want to own this stock, and thank you for getting us back down here. So I
Right.
would say this looks like a very constructive chart. You know, I don't know what I don't know how earnings plays out, but buying the calls on Friday here and then buying them again here, and earnings are out today after the bell, seems to lend to good news. Okay, that's what
Mm-hmm.
I would say.
Okay.
That's my thinking. Okay, it's back to back buys into the number. I think that's saying something there. I don't know if it gets to 35. It just they're playing April, so they're playing a little bit of time.
Mm-hmm. Mm-hmm. Okay.
Okay.
Yes.
All right, so
Fair enough.
that's MOS, but MOS leads to. I mean, we can go through some of these commodities. Have you seen anything? I've seen a few
Yeah.
things.
VALE was it?
Yep, that's the one I saw. I saw a lot of the March. Looking at March here, it's hard to tell on this one whether or not, and the stock is down too. So, you know, Vale is iron ore and nickel, I believe, right? Iron
Mm-hmm.
ore and
Mm-hmm.
nickel.
Yes.
Is that what it is? I believe I know iron ore, but nickel. You see all this 18, 19 open interest. It's
Mm-hmm.
huge out there. It's huge. So this is something that to me it makes it difficult to break through this. This is obviously a lot of stock and a lot of leverage here. So that's one point. But they are buying these things. They are the vol is up. I'm wondering, part of me wonders, and I'd have to do some research, whether or not they're buying to close. Okay, this one actually
Mm-hmm.
looks like a sale here. So 14, that looks like a sale, especially from 937, 108, 105, 105, 14,000, 15,000 right here on an average. Um, I would say this with the IV going down. So I would say this one was actual sale. So I suspect with the bull run since November, these are all buys. These were all buys to open, and here it looks like they're selling out. Stock is down. That would make some sense that there's some pressure. And let's see here. Again, just a lot of open interest here.
Mm-hmm.
A lot
Mm-hmm.
of open interest. So the stock had gone from 11 all the way up to 18, 19, and again, right into the sweet spot of where the open interest is. It needs, it could, the open interest is, to help you understand, the open interest is a roadblock, but could then become this sort of, this catalyst to move higher. So let's see here. We're looking at calls. Let's just look at 15 to 22. So you see how much is here right in March?
Mm-hmm. Mm-hmm.
60,000, 112, 139, 114. So after March, if the stock could hold, let's say this, like I said, is if the customers bought this, they bought this, they bought this, they bought this. Again, we're expecting the stock they're expecting the stock to go higher than that, but it needs buyers here at these levels. because when they go to sell 60,000, 112,000, 139,000, maybe 114, and this might be some sort of call spread, but let's assume it's all buys. If when they go to sell these, this is 6 million shares. This is 11 million shares. Is that right? Yep, 11 million shares. This is 13, almost 14 million shares. So you're talking about 30 million shares for sale between 17 and 19. That's a decent amount for sale. So what might happen is if you get a situation where VALE kind of holds around here after a big move, see this big move all the way up, and then it holds, that's basically telling you, okay, this actually, once this is gone, then you know the next big move is, or the next big open interest level is 116 here, is 116 at $20.
Right.
Okay, so this acts as a wall. Okay, it could act as a little bit, you know, people talk about this gamma and the gamma squeeze. When it's trading 14, 15 and it starts moving up, it could trade like it could cause the gamma could cause it to sort of move into this block. But once it gets here, it definitely needs more real buying of stock past these levels to kind of push it a lot higher. Okay.
Yep.
So that's something to think about. Okay. I see sales here in the VALE today. So we'll just go with that for right now.
Cool.
What else?
What about yeah, go ahead.
I mean, let's look at the ExxonMobil. Let's look at the oil, ExxonMobil, Oxy, MPC, and names that we've looked at.
Yes.
And then we can go into FCX was a complete disaster.
Some we haven't made money on, some lost on. Yes.
Yeah, exactly. Okay, so let's look at
XOM.
So Goldman's high on this name. They like this name. These look like XOM, the April. They've been pushing this name. To their credit, they've been pushing this name for a while now. Okay, so the 55 calls are being, looks like they're being, let's see here. Where's the vol? Vol's kind of flat. It kind of picked up at 39, up 1 point. So 39 plus 7. Just looking at the high volume, 39 on the bid, 285. Okay, so it was on the bid, 285 on the bid. 39 is not telling us too much. So let's look at 1129. Let's see, 1129. Okay, so 1120. Let's look at the progression. 294, 96, 95, 98, 94, 92, 285. So it looks like a sale, right? It looks like 392, 390. So it looks like this could have been a sale.
Right, but there's also on the put side the same amount.
Let's see. Ah, there you go. Good eye. Look at you.
Yeah.
Look at you. So this actually could be a funding play. Could actually just be a funding play. I would say that's what this is. Okay, so now that we see these two.
Was it selling call buying puts maybe, or?
Yeah, likely selling
Right,
call
likely.
buying puts. Okay, and for whatever reason they didn't catch it here on the spread. For sometimes the EBO when they mark the tickets, a lot of this stuff, you know, could be just an error for right now, and they fix it later on. But it's likely that it was a spread. Let's see that again. It's 22,950, and this one is that what we're looking at. We're looking at 22,962. Okay, yeah. So it's likely that it was either buying calls, selling puts, or selling calls, buying puts, and then trading the stock. We talked about this type of trade last week, where it's just a funding trade. Anytime you see these trades, it's highly likely that it is not a directional. It's a directional trade. It's basically, you don't have to consider it with UOA. It's one of these things that is being done for another reason.
It's noise for us. Okay. Yeah.
It's noise. Exactly. Great. That's great. Great word. It's noise. Here we have 10,055. We have the 75 here. Let's just look at the March. It's hard to say. I mean, this looks like it actually was bought. Okay, but this could have been 78,000. Could have been. It's Exxon would be a good name to overwrite if you had millions of shares, right? Because it's usually not going to go up that high, and if you can get any, it has a big dividend too, which also brings the stock down, right? 87 cents is like a dollar. So you know, this is always a good candidate, like a Pfizer, to like sell, to go out there and sell calls. So I would suspect that 55,000 to 55 strike, probably it might have even been like 1x2s or call spreads here, where you're buying 47, buying the 50, selling the 55, something like that.
Mhm.
Okay, coming from, let's say, back in January. I'd have to just research it, but it seems like this one was probably sold and they're just buying some of this back here. So maybe they're doing something like either see how this is trading, this is trading, this is trading, and this is trading. It
Yep.
looks like probably these were buys and this was a sale. So they basically buy to close, sell to, I'm sorry, sell these to close, sell these to close, sell these to close, and then buy these to close.
Right.
Okay, so they've probably made some money here and they're just closing some of that position. All right.
Okay, makes sense. Cool.
Okay, MPC. I mean, this is a name we like. A lot of leverage. Stock is trading well. What's there to say? I mean, I think it hit probably close to 175% today. You know, trying to reach the 200. We are long the Julys, the July 50s. So you got this number here. It looks like some of us are getting out a little bit here.
Yep.
Okay, so we have the July 50s. This is good. Let's look at FCX, complete disaster. So me, I'm definitely not good at picking the low on the option, but I'm pretty good at picking the highs. I tend to do it on a few occasions. This one was a complete disaster. And I guess the point I would say with these is, you know, look, if it's a stop, it's a stop, and it's just part of the game. There's nothing else to say about that. However, you know, this one is a great candidate if you're buying 3 lots or 30, 10, 10, 10, or 1, 1, 1. You know, this one never, to me, this is a travesty. Okay, because you know we're picking an option that's 3 months away. Call it 2.5 months away, and you know we got to get out of the trade in 4 days. Like, that's not, in general, I don't like that happening. Obviously I don't like being stopped at all, but we never got a chance. It was always against us. It always pushed against us. So in those scenarios, you know, it's about, there's a trick. I mean, the trick I've given you in the I call it a trick. It's really, it's just trying to manage risk, but you know, it's also a mind trick. We're paying for April, May, June options, and we don't want to get stopped on day 4, on day
Right.
6. It's just, we don't want to do that. It takes a little bit of patience. It takes a little bit of saying, okay, I'm in this for the next 4 months. I want to see it. The thing that I tell people, and I can't say it enough, is think of it as a fight. You're in a fight, a street fight, and you know, you're like, all right, I think I can take this guy. And you know, not that you should be in any street fights, Marco, but you're in a street fight, and the guy, you start fighting, and you know what? You get hit right in the face. You're like, that didn't feel so good. All right, but you're still standing, right? And you're going up again, and you get hit in the face again, and that really didn't feel so good. What would you do? Well, if my son was in a fight, I would say, step back, step back. Let's go lift weights for 3 months before you go back and pick another fight. You know what I mean? Like, step back for a little bit. The market is putting pressure on you. That is the definition of how the market's putting pressure on you. So if you're losing on the first, you're losing on the second, don't buy the third. And then there's some logic to it, because if you buy 1/3, you buy the second third, and you'd never buy the third because it just keeps going down. Like FCX goes straight up with long puts and it goes straight down. You can't really get stopped. Right? You can get stopped when it really goes down to 10 cents, and it's pretty close to that anyway. But you're left sort of saying, I can watch that now for 2 months. It's likely I'm going to lose the 50%, but at least I get to watch it for 2 months. And I only want to actually get back in it if I actually get a good volume above my second. So I buy the first, I buy the second. And meanwhile, I'm throwing some punches too in this fight. And I step back, and all of a sudden I see the guy getting a little tired, because you know what? The one I connected right on his jaw, I see him wobbling a little bit. And I say, okay, I got him on the ropes now. Right. And so when it comes back, and when the stock comes back above the second level, then it's okay to get back in, because these things are trending markets. So if it's trending and we caught the wrong end of the trend, and it's going to trend for 5, 10, 14 days, at some point that trend might stop and it comes sharply lower, comes back sharply lower, then at least you got a chance. You got a fighting chance. But if you buy the third, and again, you can do the math. Let's say it's $2. You bought the second one for $1.50, right? So you have no stop yet. But if you buy the third one for $1, let's just call it $1. It looks tempting to buy it for $1. But the minute you buy it for $1, there's a rule. You've now attached a rule. and it says, Marco, you have $1.50 average. If it hits 75 cents, you got to sell it. Okay, that's the rule. So what happens is mathematically you think, oh, 75 cents, $1 is going to actually drop my average down significantly, but it's also going to put you right up against the 75 cents. From $1 to 75 cents is only a quarter, and that could happen in, the next day. And so now you actually, by paying that dollar, you've actually created this possible exit. And this is what I don't want you to do. I don't want you to fall for this, illusion that you're getting a better price. You are getting a better price, but you now have a stop right behind you that you actually also have to follow, right? You have to respect the stop. So it's a little bit of a trick. It's a little bit of mind game, but what I'm saying, it's very easy. You buy one, you buy two, stop. You're getting beat up in the fight. Okay. And I want you to stop. I want you to pause. And I want you to put that at the end of the line. You can only lose 66%. Okay, 60 to 65%, whatever you put in. And if it gets down to 15%, okay, then you've lost that. You put $600 on $1,000, you put $650. If it gets down to $150, all right, you lost your 50. But for it to get down there, it's got to really be wrong, and it's likely not even going to come back. And so that's how you play a little bit with a little bit more patience, a little bit calmer, and a little bit. I'm not picking these things for them to work. I'm surprised when they work in 2 days or 3 days. Frankly, I'm actually surprised. We're picking names that we think are turning the corner, that something in the near future. Remember, if the guy buying the calls or the puts thought they were going to work the next day, he wouldn't be buying 3-month options. He would be buying 1-week options, 2-week options. Okay. So when they work or don't work right away, it doesn't faze me. I don't know how it's going to work in the next 2 days, but what I am trying to do is sort of watch how these things are working and how the stock is moving. And especially if I got 5 months, we're trying to get in there. There's no doubt on the first day, I'm trying to get in there. Okay. We could talk about, oh, well, then I might never get in. I try to get in. I'm the person that tries to get in. I have a little bit of FOMO, especially if they do a lot of work. I will jump in up 20, 30 cents. I'll buy one, I'll buy my 1/3. I want to be in there because I know how I feel if it goes straight up. It's disaster. I want to take my computer and throw it and not come on the podcast for the day because I'm thinking, I can't spend 5 hours looking for an idea, find one, and then the next day it's up 30 cents. And I'm like, just wait. I'm in there. Day one, I'm in there. But for me to get in there completely, it's got to show me something. It's got to show me that it's turning or something is happening. And so that's what I would say with a bunch of these, a bunch of them. We're buying 5-6 month options. Give it some time. Give it. You usually, I would say 80 to 90% of the time, you have a lot of time. You have weeks, and the people who are very successful in this sort of wait and they wait a little bit. That's what I would say. So I would keep that in mind as you're executing these things. I do get when things are getting stopped, I do get a lot of emails. What do? Do I get, if it's a stop, it's a stop. That's not a problem. But what we're trying to do, that's the fight. The fight is right in the entry. The fight shouldn't be in the exit so much. Maybe the last third. Remember, I tell you, it's like once we're in the trade, we fought the fight. We're in it. Now we are going to stop ourselves, or we have this trick that we're doing, or we're getting out at 100%. We're getting out at 175 to 200%. We're somewhere around that range. And then the last 250, now you can go and trade and figure out what you want to do with that. Trailing stop, let it run. This is, so the fight's in the beginning, and then the fight, sort of a good fight, is at the end. You're already winning. So now it's like, how much do I want to win? When do I want to get out? So the most important part of this whole thing is that fight right in the middle, right in the beginning. The middle part is sort of, we're just letting things go. So,
and I remember you asking you once, I had 2 positions. I was looking into a third. It was down already 20-30%. I was thinking about averaging down, and you told me, don't do it. The market's pressuring you. I'd rather see you go take one more when it's 20% up. and keep riding it up.
Right. If you buy for $1, then you buy for 80 cents, and it's like going to 60, 50, 40, and then it goes back and then it reaches 80 cents, 90 cents. I'd rather see, say, buy for $1, you know, and watch it go. Now, depending on how much time it took too, is a little bit of context that needs to, because if it took so much time to get there and now we're close to, there's only 3 weeks left and it climbed all the way back to $1, I might consider saying, you know what, I'll take half off. And I'll let, like, if I'll take 1/3 of the 2/3 that I'm on, I'll take half of it and I'll just let 1/3 run because I don't have that much time. So again, it's context. So if you're in 5 months and it does this dance, like, you know, call it FCX, you bought 1, bought 2, now it's just in the back of the line and you're not even looking at it. Now it drops and you say it happens over the course of the next week. That's different. Now it's like, oh, okay, now momentum's coming our way and now we want to jump on. So context a little bit matters, but that's the trade. That is the trading aspect of this, you know, this game, if you will. The middle part, once you're in, you're going to, you know where your exits are. You're trying to do that. And then if you want to mess around with the last third, by all means, you know, that's up to you. And that's totally fine to let it run. You know, some people even let the second one run, or they come, everybody's plan is different. I've heard so many different plans, and for it's, you have to find something that works for you. Okay,
great. That was awesome.
Right, good. So
thank you, Felix.
Good.
I hope everybody else liked it. If you're not subscribed, make sure you subscribe. If you didn't like it, make sure you like the video. And we're moving on to, what was it, SABR?
Yes. No, we can do SABR is one. Yes, there was Mark. I think Mark sent us an email. Mark, you wanted to see SABR. SABR, I looked at it. There is not much going on, I don't think today, but on Friday, there was significant buying in SABR. There was significant buying in the April, March and April options. There was, back into some history, but 14s and 15s in April. You have earnings this week, but you see this open interest here, 19. So here someone came in, looks like maybe today bought some. The Marches, see this right here. This was being bought. So remember last week, I showed you who? I showed you, let's see.
Was it Melvin?
Let's see. Yes, I showed you Melvin. I'll show it to you again, why we look at this stuff and what we're looking at. And Maple Lane. Maple Lane's a good one. You have better eyes than me. You see Melvin? Here it is. Okay. Okay, so I showed you this, the top 3. He changed his portfolio. This was December 3rd. This is before the GameStop, okay? And just because Melvin Capital completely blew up, you know, in January, that doesn't take away that he's really good, okay? One stock killed him. He was on, you know, you heard him speak, and he's changed. He's had to rethink that risk, but it doesn't take away from the fact that he's right a lot. And he's very, very good in the names that he chooses. Here, he's loading up MasterCard, Expedia, and Visa, which I showed you last week. And we have, what do we have coming in to buy? We have SABR being bought here right in front of, this is Friday and today. Earnings this week, you know, good base, strong. Stock looks interesting to get back to normal. We talk about normal up about 21, 22. So people buying calls here in SABR. You know, it also, if we look at the unusual options board, what do you see today? You know, you see, let's just look first at everything. You see American Airlines, again, travel. There is United Airlines, Las Vegas Sands, which we'll get into in a second. Delta Airlines, another one we looked at last week, Norwegian Cruise Lines, CCL call buying last week. So CCL is probably in here as well. We saw that going on, Royal Cruise Lines. So what are they doing? What they're playing this, what we talked about. I also showed you last week, Dan Loeb's article. He talked about $2 trillion on the sidelines, just waiting to go on vacation, just waiting to go to restaurants, just waiting to be spent. And look, if people are spending money, what are they doing? They are using their credit cards. They're booking flights. Okay. And I think that's what you're seeing in SABR, same type of trade. Okay. You're also seeing it in the names that we just talked about, which was, again, we just said American Airlines, United Airlines. We see love today. Las Vegas Sands, the Las Vegas Sands trade, that was today. This Trivago here is up. Let's see, Las Vegas Sands. Let's just go to the board. Las Vegas Sands. I mean, this one, honestly, this one hurt. Like a lot of them, I'm able to sort of just like say, yeah, you know, it's like this one hurt. The guy dies, unfortunately. R.I.P. Sheldon. Boom. Stocks gets hit. This is also a time when January. Who's long the name? Melvin Capital's long this name. Okay. He's long this name in a big way. It was a very big position. Most likely was blowing out of the position. Why? Because he had to, not because he didn't like the stock. And then the stock explodes and it comes right back to see. We were looking for this move over here, and that move over here would have taken it to 70. This looks, I mean, this. Let's just blow it up here. This makes me sad. But if you did the 2/3 things, there's a chance. That was another one that never really got off the ground. And if you did the 2/3, the trick here, you would have not looked. You would have just said, "Go ahead."
Actually, Rudy made a 300% on LVS today.
He did. Okay, yes. Good. He probably waited. Rudy probably waited down here, so it was like, yeah, good. So there you go. So, like I said, if you can hold off just a little bit, if you can hold off, that trick is extraordinarily valuable. I don't want the FOMO. I know there's FOMO. I get it. I have it myself. It takes a little bit of patience. Good. These players, when they're buying these stocks, they tend to move. Just go look. I'm building in 3 steps to profit. I am building a sharks area where I'm outlining sort of the sharks we follow, who they are, what trades they've done in the past, how they think about them, so that people could, we're chasing sharks, but who are they? Right? Who are the people that we're chasing? So I'm going to put that together. That'll be in 3 steps. Maybe in the coming weeks. I'm trying to put it all together. It takes a lot of work to find these things, analyze them, and relate them to what we're doing. But I think what you'll find, because I'll be showing you actual trades from the big guys, and I will show you what's in 3 steps. The video Inside the Mind of a Hedge Fund. It's no different. That's a very powerful video. There's a lot in there, but I'm going to show it to you in action with all these different trades and their own words. When Bill Ackman is talking in his own words and he's saying this, I learned my lesson here. He was in a trade, he got destroyed. And what was his lesson? He's like, you know what? I'm not going to do that again. I basically went against my plan, right? We're all humans. He's not a robot, although he trades very well, probably like a robot, but he's not a robot. He's a human. And, he gets caught in a whirlwind where he lost billions of dollars and he was a poster boy for disaster. So, this is the game, and I think that patience pays. So Las Vegas Sands, there are, I can't tell you how much I love this stock. I'm really annoyed that I love the stock. I think this stock takes off. I think they have a lot of money. I actually think they're probably, let me ask you a question. First of all, Sheldon passed away. Okay. Sheldon was against online gambling. Okay, he was against it. He passes away. All the executives are a lot younger. Sheldon was like 90-something years old. They're all a lot younger. What do you think they were saying to him over the last year?
Yeah, let's get online.
We got to get into online gambling. Let's get online, man. We're Las Vegas Sands. We got rid of the hotels in Las Vegas, right? Not that we got rid of them. We're still there, but we're trying to like not focus on the big properties. We're in Macau. That's our big focus. Okay, for the next 25 years, that's the place to be. The pandemic doesn't hurt. But if you're an executive at Las Vegas Sands and you're watching everything around you go online, what are you telling Sheldon?
Yeah,
we got to get online. And Sheldon's saying, I don't believe in online gaming. He's old school. He grew up with Sinatra and Vegas, and that's they built Vegas, right? So he's old school. He's like, online. No, we got the people want hotels. We got the DJs. We got the pools. That's what they want.
Right.
Okay, but everybody's going online. Look at the market caps of these things. They're explosive, right? Because they're online. So we got to be online. I suspect that you'll see an announcement with Las Vegas Sands that they're going to do some initiative online within 6 months. Maybe it's next week. I have no idea, but it just makes sense. They're too big not to get in the game in a big way, right? In a big way. So what does that mean? Does it mean that they'll buy someone? Do they want to buy DraftKings? I have no idea. Do they want to buy Penn Game? I have no idea. But they're probably looking at how the game is being played out there, how Penn Gaming, Dave Portnoy, how he has done a tremendous job, right? And how social media, you remember, you can get someone and give them shares in whatever you're building and say, look, if you do this well, you can make $1 billion to an influencer, right? Get 10 influencers, and there you go. You get this whole backing of, now Dave Portnoy has been doing that particular genre for the last 15 years. That's why I think he's a genius. And now he's using that to, there's no advertising. Penn Gaming doesn't advertise. Dave Portnoy's advertising for free on Twitter. Incredible. Yep. So Las Vegas Sands, to me, love the stock. I that doesn't mean, Rudy, if you're there, that doesn't mean don't take a little bit off at 300%. Please, lock in a winner and keep moving on. Let it ride if you. I think it's rude, but lock in some. Take some of the money off the table anyway. But yes, Las Vegas Sands, I love it. I think it's trading fantastic, and now it's in this trend today that they're buying everything. They're buying the airlines. They're buying the casinos. They're buying the cruise lines. They're buying, Planet Fitness. Been waiting for Planet Fitness forever.
Yes.
It was a loser waiting for that to go. That's going to catch when you get this opening. You get Planet Fitness is a stock that again, I love. It had momentum before the pandemic. I get the business. You can, if you want, you can ask me for the idea. It's the same idea. We just missed the timing. We thought vaccine, things are going to open up. We'll know in a couple of months. It hasn't. That's been a drag. But when this thing opens up, that Planet Fitness, I think, is going to start getting a lot of momentum. What's not working today? You got Zoom,
EVs, yeah, and
right. You got Zoom, Peloton, which is, Peloton is stay at home, work at home, and exercise at home. And then yes, the EVs. And why is the EVs? We talked about where's Tesla right now. What's important to look at, and when you look at these things, is Tesla's down 4% right now, right? And it's trading awful. So without even looking, I would guess that the Chinese EV names are down too. So this is, we talked about this chart maybe a week and a half now ago, where this diamond, okay, there was this fake gamma trade that was down here, really meaningless. But the point was that they broke this trend line here, which once you break a trend line, and this, I'm not sure you're getting a lot of fundamentals, a lot of fundamental people buying, except maybe Kathy Wood continually buying. But at this point at 850, I would say people are probably not super excited about buying Tesla for the upside, because they think it's cheap here. It's hard to believe people will be doing that. So when you break a technical up at this level, all of a sudden, you start seeing the machines start maybe selling a little bit of selling begets more selling. So we broke this 50-day. We broke this level, which we were looking at last week, this 780 level, and we're trading 744. So, when you've got a stock trading at 30 times sales and having problems with China, which I think is a mask for China again saying, yeah, we don't really need American companies anymore. We got what we needed from you, Tesla. Now we got NIO, XPEV and Lee, but these are also trading down, because if you have the lead horse in the industry trading lower, and everything is priced off the lead horse, then NIO is going to come down. Lee should come down. XP, that's a dangerous level in Lee. I mean, you can just see it. I want you to start visualizing these things quickly. One line going across, one line, you could see that, and this is coming down here. So it's got to make its move somewhere here. Break this 26.5 or break 31, 30 and a half here to move up, but it's going to do something here. It's getting tighter and tighter here. So that's Lee. But they all look like that, right? The NIO looks like that as well, even though NIO looks a little bit worse. XPEV is another one. Okay, and that leads us to CCIV in the in Lucid, right, which is the Saudi name. This one, I would say, if you're long, you got the announcement, right? You got the announcement that you've been waiting for, right? You are looking for them to come out with this Lucid. They just gave you the announcement. They said, okay, it's basically, Bloomberg said, I think it's coming out tomorrow. So you got the announcement. Great. He did what he was supposed to do. He got Lucid Motors to come in. Great. The SPAC is now worth $13.5 billion. Incredible. We had this thing at $17 right here, literally right here. We were talking about it,
Mhm.
and it went here. Congratulations. I would say maybe it's time to just take a little bit off. The news is now out. They're going to get Lucid Motors. If it happens tomorrow morning and you get a pop again for another, 5%, 10%, I would say it's probably a decent time to let go of some of the CCIV. Okay. Is that fair? Sort of like you're waiting for the news. It happens, and there you go. It's like, okay, you don't have to take everything off, right? But you could start taking off surely. I would say at least half here. Okay, if you've been right into stock, some people told us instead of the options, they bought the stock. Great, 17.5 to 60 is 3 times your money, right? It's about 3 times your money there, almost. And there you go. Just take off half. Okay, that's how I would think about it. Okay,
I mean,
you're getting the news.
Yeah.
What's that?
I myself would have sold at 50-ish. So
yeah, I would have sold it at 21. I think I would have bought it at 16. I was at 21. I'm like, 5 days, okay.
Right.
So yeah, congratulations. You hold it up to 60. I mean, I gotta hand it to them. It goes in handy when things are going up, but when things turn and it's not working to hold, I would be careful. That holding could we talk about the mountain. Yep. Well, when the market's going up the mountain and you're holding, you're able to take it to extraordinary levels. On the way down, you hold, and what happens is holding, and then you double down, and then it goes up a little bit, and then it goes down, then you double down more. You can run into some trouble. We don't double down here. We do not double down. That is not something that we ever want to do. Double down.
Yeah.
Let's go to what else we're seeing. What else?
Now I've seen some puts in DDOG. Yes.
Puts.
Yes, finally.
No way. Somebody's buying puts. I got to tell you what I did too, which I'm putting together now. But let's see. Where's the DDOG? Hold on. Let's look at DDOG first. I don't see DDOG. DDOG. Let's just go right to the chain. DDOG. March. Where are you? Look at that. That's a lot.
Yeah.
DDOG. Okay, so DDOG does they do like cloud data visualization. Companies have all their software and their platforms all over the place, and then you hire somebody like DDOG to come in, and most people, the techies, they understand how to look at everything, and they go, oh, you just got to look at this, this, and this. And most people are not techies, so they want something that visualizes everything that's going on and something that brings that data, puts it on the screen, and managers can make sense of it. It's sort of like when I'm looking at my stats and I have no idea what's going on, I just say, is it good? Is it bad? Like, tell me what's going on, right? I'm not a techie person, so I want everything in one spot, like a dashboard. I think that's what DDOG does, and they do it over the cloud. So the stock is down. Stock is down 4.5%. The puts here, 14,000. Let's just look at them. 103.54. This looks like a sale, but it may not have been a sale. It looks like a sale because you see how this traded at 50 cents and then traded 68, 73. It looks like it traded at an IV that was much lower. But what I'm seeing here is that the stock dropped pretty significantly from 103.5 down to 100.5. So what I would say here is, one, it doesn't make sense that somebody would sell those puts at 50 cents. That's just me. It doesn't really make sense that somebody would do that. You'd have to buy you'd have to be saying, I want to buy 1.5 million shares at 50 cents.
Right.
And you're not getting paid that much. It's just, I feel like it's silly to put your capital. I don't think people would do that. I would think that someone came in and said, Felix, I want to buy 14, 15,000. Sometimes these things, if this is a late print, meaning that it gets on the board, the stock starts moving before I can get it on the board, right? Maybe we bid 50 cents quickly. And then we get hit somewhere in the middle because nobody's going to sell it. So someone comes to me and says, where can I buy 15,000? And I'm at Bank of America, and I say, I'll show it to you at 50 cents. And they say, okay, fine, buy 15,000, 50 cents. So I go to move, I go to bring it to an exchange, whether online or through a broker. And when I put it up, the market goes 40.60 or 40.70 in this case, maybe. And I put up 50 cents and I'm committed. I have to sell it at 50 cents, but I'm hoping somebody else does. Then we put it up there. Nobody cares. I wound up selling it at 50 cents to the person. Now I got to go sell stock, and the stock is already trading lower. So this one looks to me, aesthetically, it looks like a sale. It doesn't make sense that somebody would sell it. And on the sale, right when they sold it, it doesn't also make sense that the stock goes straight down. So I would suspect that they actually bought it. And it makes sense to me because I know that this stock is trading like, I think it's trading close to 30, 40 times sales. 30,
Wow.
40 times sales. They just got their earnings out, and it was just okay, right? It was just okay. So you could see the stock. Let's look at DDOG. You could see the stocks had some trouble here over the last. It's trading from 120 to 100. Breaks this again. You know, if you want to see one line, what's one line here that we can draw that makes some sense?
Maybe around 80.
Right. I would say, yeah. Sometimes I like these every once in a while. If it's very clear, you know, I'm looking at this. But yeah, this also could be sort of at that's 97, right? Here. Looks like I had a little trouble here. Here's a big level. Here's a big level. And then this over here. So I would say 97.5. But see this trend line like this? 95 breaks through that. We're already under the 50, which is step one. Step two, we want to see it. You know, this 97 seems to be a little bit of a stickler, a little bit of a stickler. And so I would say this is probably the level to watch, 97.5. But if it breaks 97, 95, you know, what did they buy? The 85s? Which one did we say they buy? You showed me.
Let me see.
DDOG. The 85. Yes. So you could see how fast it can get to 85. Okay. 39 times sales, 40 times sales, 30 times sales. These stocks are, I mean, without momentum, they don't belong here. So, you know, you look at something like, and the earnings are just okay. I mean, they weren't like blowout earnings. They weren't something that, it's just in a sexy space. Their competitor is Snowflake, this SNOW, great stock. But I mean, the stock's in the, you know, nosebleed seats. I would say 85, you get to 85 and it could easily, this trend could easily break down here to quickly get to 80 and test 80. But I was saying, look at another name that is, you know, cloud, you know, this type of 30, 40 times sales, you know, you don't have good numbers. It goes from 120 to 80. Here, this was TikTok. They lost TikTok, but doesn't have good numbers. 120 to 80 in a nanosecond, right? It was 5 days. So what this could be signaling, because we're not seeing I'm starting to see more and more puts that people starting to either hedge, sell calls, or whatever. But what it could be signaling, you know, let's take a look at Peloton. Peloton's, I don't understand how this is valued at where it is, but that's just me. I mean, I would have been shorted over here though. You know, 78. This is like they sell bikes with basically an iPad on the bike. You know, and I mean it's like I don't understand. But you know, lifestyle, great corporate. I don't understand. Okay, Peloton trades at some ridiculous sales number. That's trading weak. That's also down because you know it's in this work from home, play from home type of environment, exercise from home. Zoom is the mother of all of these work from homes. That's been down the last 4 days. So you're starting to see things in this space, you know, anything that's making money because you're sitting at home under a little bit of pressure. But also, I would say that, you know, we looked at Tesla earlier, our lead horse, which is trading 30 times sales, is having a little bit of problems here. The market might be saying, okay, again, let's go back to our SPY versus TLT trade, where, you know, we're thinking SPYs could come under pressure or that spread is just going to collapse. But we believe that's a SPY, that we believe that bonds won't probably go up as much and you'll see SPYs come down more. Why would, you know, how could that affect momentum names? Well, remember, momentum is about movement. Okay. So when we're talking about momentum, we're talking about movement. Stocks need to move. Stocks move, they go up, people buy more. They go up more, people buy more. It's George Soros's reflective idea. Without movement up, people get bored. People sitting there going, stock's not moving up anymore. What's going on? I've been long this. Maybe I should get out a little bit. And so people start, it's like giving people a chance to think about what they're long. And if you let them think long enough, they might say, you know what, I'm just going to get out of this. I need stocks that are moving. Otherwise, my money's just being sitting there in a name that seems like high valuation name. So Tesla's down. That's bringing stuff down. You have the SPY, which might be not that even it goes down. Maybe bonds just go way up, but SPY will have some for sale, which means that you probably have a lid on some of these stocks for the next 4 or 5 weeks. I would think that you would have some sort of lid on them. Not that it's going to go all the way down, but there's going to be some lid. If they need to sell and they're selling it down, and the SPYs are the one that moves down, or the S&P 500, then what happens? All these momentum names, instead of going up, they actually start coming off a little bit. Mm-hmm. And when those things come off a little bit, you run into a situation that could be dangerous where the stocks actually are down, and then actually do one of these drops, these hard drops. That's what I sense. Maybe people are looking at some of these names and saying, I want to lighten up here because momentum's going to pause for a bit. It might pick up after, come April, May, we might do it again. But for right now, it's getting a little shaky. You know, when Miss Wood, Kathy Wood, is out there saying, oh yeah, by the way, we might get a reset. Like, whoa, what does that mean? You're the queen of momentum. Like you are the god of momentum, the goddess of momentum. And you're out there saying, oh, we're going to get a reset. It's a little it makes me a little nervous if I'm long arc. Like, what do you mean reset? What does that mean? Reset can mean 155 to 90 again. What if Tesla goes from 750 to 400? What does that reset mean? That reset could be down 50% in ARC. Mm-hmm. And if you're down 20% in ARC, guess what? People are going to start selling. And then remember, she has to sell. And then who do you sell? Because those prices it feeds on itself. So again, it's a dangerous situation. We're in a dangerous spot. It makes it a little bit difficult to sort of maneuver around this. But, you're always in the back of your mind, you got to remember that we are in a dangerous spot. The market could be down 5-10% in no time. Time.
Mm-hmm. Okay.
Cool. Any questions?
Yes, actually. There was one EOA, and then you also, I think we talked about QS and Soros. Maybe you wanted to show us that.
QS. Oh, I showed you this. Yes. Yes. So QS last week. So we talked about, you can look at the video in QS. So just, let's see. You want to show them how to do that? If you just go to the YouTube, let's go to the YouTube options page. Sure. Show them how to do that while I get this QS up.
I will. Okay.
How do you find the QS thing? It's simple, but to be honest, I didn't even know how to do this stuff.
Okay, I'll show it now. Right. So you go to OptionsGeek.
I see you got to share your screen, yeah?
Mm-hmm. Yeah, here it is.
There you go.
All right.
All right. So click on OptionsGeek, right? And I never knew that. There's a search bar right there. So it just makes it easy. You click that search bar, click QS, and then you should see where we are. So go back up, please. Mm-hmm. Okay, so the second one, Quantum QS are the top 1% getting out. That was a month ago, and we nailed that. We did that when the stock was trading like 115, and we had this one trade where it looked like they were getting out. 5 days later, it was trading 50. Now, 2 weeks ago, we were talking about people were getting long. There was call buying in the name, and sure enough, the stock is now starting to move up. I've looked into this name. I mean, the reason why it was up, they actually made a real positive announcement on their battery and battery technology. I think it's really interesting. I've been reading up on it, trying to learn more. QS. The other thing people were talking about was, if you could share my screen now.
Yes.
Do you see it? So you see George Soros.
Yep.
3.315 million shares. That's $280 million here. He's one of the top holders. And the story was that George Soros was getting in. Part of the story left out because I'm saying, okay, who's long this? This is Fidelity, Janus. I didn't know Leland Stanford Junior University. I figured it was Stanford, but I didn't know this was the actual name, Leland Stanford Junior University. So this is Stanford University. So they have shares because they probably funded this.
Nice.
I think the CEO name is Singh, CEO Singh, and so they took a chunk, and now that stake is worth 650 million. Backers in this are Volkswagen, and Bill Gates is in this, and then you got George Soros. So Soros pops in. Now, as I'm looking at this, I know who Millennium is. And these I was looking at, I didn't really, it drops pretty quickly, but I saw Soros, and then I say JS Capital. That sounds familiar too. And if you go look, you can just Google JS Capital, and guess who JS Capital is? JS Capital is George Soros' son. Okay. Tavares, I don't know. George Soros' son, JS Capital, it's his largest holding. So you have Soros buying 3.3 million shares and his son buying 3 points. So this is a $560 million position in the family.
Wow.
I think that's interesting. I think the media didn't pick up so much on this JS Capital, but he's in there. So look, you're buying the stock that Soros getting in. Now it's December 31st. Who knows if he sold out of this or not? I have no idea. It pops up with 45 days. But when you're seeing call options trade and things of that nature, the stock is, if there is another run. Sorry, let's look over here. If there is another run in the market, this is starting to look pretty juicy. So it's expensive, but if we get it, this is one of these things where if this is right, if the battery works, the way it's supposed to work, it trades like 500, but it's going to take time. They don't expect to even have a commercialized product until 2025. So right now it's a story, but you have some significant backers, some obviously very smart people, and people that are in the know. It'd be interesting to see sort of this play out. I suspect if we get something where it trades back to 50, this is something that it's interesting. It looks really interesting here. This might have been, remember we talked about the mountain?
Yep.
This might have been the first little mountain. The next big mountain is going to be 130 to 500, right? So
wow.
that's what I'm giving it some credit that maybe this is the first mountain. Like a penny stock goes from $1 to $5. If you just graph that, it looks like this. But then when it goes from 5 to 50, it'll look like, straight up. And then just becomes 20 years from now, this will just be a little tiny little mountain. Okay.
Cool.
Here's my effect. This right here will be a little tiny little mountain. Okay. So something to look at. QS, Soros getting in. The one thing I wanted to point out was that his son was actually in there right behind him. So Soros he made this his fourth largest position. And then his son is in there, making it his second largest position. Okay. Second largest. And everything else is like a lot smaller.
Right.
So something to think about, something to look into.
Okay, let me give you another one from Priya, and it's SLM.
Sallie Mae?
Yep. Sallie Mae in March 15 to 30 put spread, it seems.
Sallie Mae. Sallie Mae. So open interest. So right there it tells me open interest is 37,000. Someone is probably selling those. My initial thought is someone is selling those to close and buying this and moving it up. So they're just doing a repair trade where they're saying, okay, we were wrong. We're trying to buy the 13 puts. We are selling that. Let's see where they sell them. At 12 cents, 30,000 times. Okay, 12 cents, 30,000 times. It's 36 cents. And we're buying this 10,000 times, 64 cents. So net, we pay 28 cents. 28 cents. Right? So I pay 28 cents, 28 cents for the 1x3, but really I'm actually getting out of these. So I was wrong. I'm paying up here. Why would somebody be, let's look at Sallie Mae. Sallie Mae had a big run here. It's had a huge run. Sallie Mae is, let's look at Sallie Mae. I want to say Sallie Mae is obviously some bonds, but I think they're tied to housing. Is that right?
Let me
Let's
see.
here. Where's the Sally Mae? Where's our little thing here? Sally Mae. Rebounding consumer, cash tender, Sally Mae undervalued. Twitter. I'd have to look at it. I mean, I haven't looked at Sally Mae in years, but my thought is that Sally Mae was government sponsored mortgages.
It says
Government,
originates and services private education loans to students and their families to finance the cost of
so
education.
Sally Mae is the educational loans.
Mhm,
Okay,
mhm.
so it's educational loans. Well,
But it also does
there's a lot
saving
going on,
accounts,
and
right?
got AOC asking Biden to to dismiss
forgive loans.
$50,000 for everybody's college loans, which is, I wish I can go back in time and say, yeah. But I don't know. I'd have to look into that story, but it does look like someone was trying to short it. I don't know the date, 30,000 times. Now they're just rolling up. They were wrong. They're rolling up here.
All right. Last but not last, ET. Take a look at ET. We got a high demand here in the chat for ET. So
transfer, right? Transfer.
Yes, $7 stock.
I read something. Yeah, I read something about this though. There's something interesting going on about this stock. I don't know the story. Because it's $7. A lot of times it doesn't interest me, but the chart looks fantastic just by looking from the corner of my eye here. Let's just look first. Okay, so chart looks fantastic, but there's something. I read something, and when I saw $7, I was like, oh, okay, maybe I'll go back to it. But hold on one second. Let's see. Where's the ET? So ET. 36,000 of these. 50. Is this here? Offer spreads. 14 cents. It's up. The VALE is up here in this name. Looks like it's a buy. I'd have to go back and I'd have to be convinced that this wasn't a sell. So I don't know if they're buying here to not seeing any prices for whatever reason. Let's start again. Energy transfer. Here we go. Okay, so you have the March 19s. I'd have to check that open interest. I'd want to investigate, this looks like it's a closing transaction from here. So my guess is that someone might have been, I don't want to guess. I would say this looks like a buy. Someone might have been short the 8s. Maybe they got short. It could have been the stock was $6 and right around here coming into the new year, 6.5, and they sold the 8s 50,000 times or 35,000 times, and now the stock is breaking out, and so they are buying it back. Probably not that much higher. I'd have to see where it is, but it looks like probably not that much higher than where they sold it. Okay, so they probably sold it somewhere around here. Okay, and now they probably sold it at 40, 50 cents, and now it's trading 8, and they're buying it back at 32 cents just because time has elapsed. But they see a breakout in the stock, and now it's sort of, okay, maybe the stock's going to make this other move. But if you look at 4 3/4, the way I would look at it is 4 3/4 move to 7, so that's 2 1/4. 4 3/4 plus 2 1/4 is 7. 2 1/4 plus 6 is 8 1/4. Gets me to about here, which is about the high. So it looks like for whatever reason there was some trouble at that right around that level. 8. So right around here. So this is just an ABC move. So it's A, kind of here would be B, C, 8 1/4. There's another wave here. This is Elliott waves, by the way. If you're looking at, you want to look at techno analysis. This is 335 to 865, 850. So let's call it 3.5 to 8.5. That's 5. 4 3/4 plus 5 is 9 3/4. Gets us back to here, which is exactly where. See how nicely that works, right? Here's clearly that's the line, right? I don't have to tell you that's the line, right? Let's do this here so you could see it. By now you start one line. That's the line, okay? That's an important line. Okay, now this is also a little bit important here. You see right here, it's sort of find a low here, but this becomes, this line right here is where it's got a break here. Okay, so there's my horizontal lines. Okay, horizontal lines. Now I can take, this is called Elliott waves, right? So Elliott waves basically says that stocks move in these waves. They go up, they go down, and then they go up, and then they go down. And you can go read about Elliott waves. There's a lot to learn. I know the high level stuff, the stuff that makes sense to me, the simple stuff, and I leave everything else. There's a lot going on in Elliott waves. There's books and books and books, and you can have fun doing that. So that's something that you can do on your own spare time. But it's basically this down here, and then this is A, B, and C, or A, B, C, D, whatever. I think it's point A, B, C, D. So it would get me to, that's how I get to this level. So that's all I'm doing. But it looks interesting. I suspect that people are seeing this. And so the next move might be to 8.25. If they're short the 8s and they're buying them back, it's because it now has that potential to start going to $10. Okay. Is that fair?
Yes, definitely.
Okay, so that's probably, it looks to be closing. It looks like somebody sold to be closing, but that means that they're probably long the stock and they sold those to just take in some premium.
I see.
But if it's a SPAC, $10, it would make sense at $10. Energy Transfer LP seems like it's some sort of SPAC. So $10 is that level.
Right.
Yes?
Okay.
Good?
Cool. Awesome,
man. 16 minutes you owe me.
Oh, damn. Well, you guys better like and subscribe and share.
Yes, we need some likes there. I gave you 16 extra minutes.
16 extra.
All right, good, man.
So thank you guys. Thanks for watching. Thanks for commenting. It was a great session.
Awesome.
And we'll see you all tomorrow. Thanks, Felix.
Thank you.